Hi, this is Paul here from research department. We'll just proceed with our weekly updates. Okay. In terms of some of the key events last week that we took notice of, will be, of course, in terms of the macro picture. As you can see, on Friday was released the U.S. wage growth. Or wage growth data, or average hourly earnings. This is hit about 2.9%. So this is on year. So it's almost like 9-year highs. So this basically is just a reminder that there's still going to be pressure on inflation and interest rates. The other piece of news was, of course, the trade tensions is ratcheting up. I think Trump has mentioned the tariffs on the 200 billion of Chinese imports. I think the comment from the president was that the tariffs will take place very soon, and then there will be another US 267 billion underway, which basically mean all imports from China will have at least a 25% tariffs. This final batch of 267 will include handphones. The other piece of news last week was, of course, the Indonesian rupiah hit 20-year lows. So obviously, this is going to affect consumer demand as imports gets pricier, and also the authorities are putting on some fiscal constraint. Some of those power plants that have yet to get financial closure, they are going to postpone it. At the same time, of course, financial conditions in Indonesia and, of course, most of the emerging markets will be tightening as interest rates rise. I think Indonesia has increased interest rates 4 times this year. So some of the stocks affected will be, of course, your Jardine, Cycle and Carriage, and also even First Street. Although First Street is not directly impacted, but it will affect the ability of the parent. It will be positive for some of the exporters, of course, like coal and palm oil exporters. The other piece of news last week was, of course, the Facebook 1.4 billion data center. This is about 1.8 million square feet. To put that into context, it's almost 6 times Capital DC REIT's space. The implications is just that it will just reinforce Singapore as a hub for data center. I think 50% of some reports there will be like 50% of the data centers in Southeast Asia is housed in Singapore. Of course, this will basically, as a hub, this will help fill up the space and also a new form of demand for industrial land in Singapore. It's positive, of course, for Capital DC REIT, Capital TNT that builds in, all these data centers, and to a certain extent, even Sengtel that has some data centers. In terms of our conclusion, we are still stay defensive. 2 main reasons for this. Of course, as you can see from the trade tensions, news flow is still negative. And the other aspect is that I think financial conditions are tightening. As you can see, US rates are rising. Emerging markets also raising interest rates. And if you can see the bullet point at the bottom, as you know, on the 13th, there'll be a ECB council meeting. And most likely they will continue. There will be the quantitative easing will be tightening now. Will be at least no longer easy. What they'll do is they will purchase half the amount and end all the QE purchases by December. So in the general, we're just staying defensive because of the news flow and the tightening financial conditions. In terms of the stocks, will be some of the yield stocks will be like Ascendas REITs, Capital Commercial Trust, and even the telcos. And the beneficiaries will be those US dollar revenue income earners, which have Malaysian or even Indonesian cost base. This will include the coal producers, rubber glove, palm oil, and even some electronic exporters. In terms of news, week or weeks ahead will be 12th September will be the iPhone XS launch. And also on the 13th will be the ECB council meeting. And of course, on the 24th, the following week, we will get the inclusion of Dairy Farm. I'm not sure why they put Dairy Farm in there. The outlook for Dairy Farm isn't that great. But anyway, the Dairy Farm will be replacing StarHub. And of course, the other part will be the FOMC meeting. This is just our usual, this is our absolute 10. This is our research department model portfolio. This is our key top 10 stocks. We try and break down the portfolio into yield, growth, and also re-rating plays. Okay, I will move on to the next section. Minin is on MC today, so I will just speak on her behalf, just on the update on Singapore banking sector. Okay, the first part is just on loans. As you can see, that a bit tiny, right? But the black line, that is the loans growth number, is still stable. Sorry, the light blue line is still stable. What has been pulling up loans growth in Singapore has been the business loans. Of course, consumer loans has been a bit weaker, but car loans, it's still actually surging ahead, about 8.6% multi-year highs. So we still expect loans growth to be stable, not robust, but I think after the cooling measures, but it will still stay around the 5% level. In terms of Hong Kong, Hong Kong's loans growth, as you can see, is 9.5. It's actually double the rate of Singapore, but it is slowing down. I think partly part of the loan number, of course, is also affected by IPOs. Okay, I will move on to the next. Of course, the best story for banks is obviously the margins. As you can see, the black line, which is the 3-month SIBOR, and even the SOR, continue to hit multi-year highs. I think SIBOR is about 10-year highs. The reason why banks are doing well is if you look at the difference between the light blue line, which is their cost of, in a way, they are for their so-called cost of funds in a way, because this is for those who have got a lot of CASA or current account savings account, which is basically DBS. So if you can see the difference between this light blue line and the red line, this is basically the net interest margins that the bank is the direction of the bank net interest margins. As you can see, the gap here is probably almost a 10-year high in terms of net margins, and continue to climb. So that's why the main story, at least for now, for banks will be the continuous expansion of their net interest margins, which is this gap here. Likewise for Hong Kong, but there's a bit of a slowing down in terms of their interest rates. Okay, so in terms of this chart is mainly just to keep a watch of asset quality for the banks. As you can see, as you all know, 2014, 2015, when the banks were hit by all the NPLs and oil and gas. So this is just to monitor what is going on the asset quality. As you can see from the red line, the utilization rate is beginning to recover quite strongly for some of these jackups. And as you all know, the first thing to move is, of course, the utilization rate. Then once utilization rate moves, then you can actually even see day rates moving up. I think Transocean even mentioned they think day rates could actually double in 2 years' time. But anyway, obviously this is all positive. That means there's no, at least from the oil and gas book side, there's no deterioration. We just use this just to monitor on the asset quality. Okay, move on to Guang Che on coal.
Okay, thanks, Paul. It's Guang Zhi here. So next I will give updates on our monthly coal. So what happened over the past 2 months was that in China, the authority finally issued a 3-year plan for cleaner air cleaner air. So this is so-called the battle for a blue sky. So the authority aims to reduce the emission of major air pollutants and greenhouse gas. So these are the detail of this 3-year action plan. The emissions for sulfur dioxide and nitrogen oxides dropped by 15% from 2015 level. And PM 2.5 density will also drop. The percentage of days with good air quality will increase. So there are 3 key regions that the authority targets to monitor. One is the Beijing, Tianjin, Hebei, and the surrounding areas. The second one is the Yangtze River Delta, and the third one is Fenhe and Huihe River Plains. So why these 3 areas are closely monitor was because these 3 zones or regions are heavily industrial concentrated. That means a lot of the manufacturing sectors or plants or factories are located in these 3 areas. That is why the authority wants to keep monitoring of the pollutants released here. So basically, what does this mean to our coal sector is that a lot of the small and medium-sized coal plants will be shut down accordingly. And also the coal sector will continue to be consolidated as those plants that fail to qualify the environmental standards will be eliminated. So in Indonesia side, in July, it is said that the authority may revise the coal DMO that issued earlier this year. However, 2 weeks ago, the Minister of Mineral and Resources came out and said that the current policy will be unchanged, and the market expects this policy will continue until the presidential election next year. So what is our view? We think that there will be more seaborne coal to offset the domestic shortfall. Why? Because in July, the domestic production in China dropped slightly by 4% year on year. However, the imported coals jumped up 49% year on year in July. This is a new high since January 14. Accordingly, if we take a look at the coal exports data from Indonesia, it was in line with the jump in China's demand. So the total exports from Indonesia surged by 33% year on year last month. Also, the port coal stockpile continued to build up, increased by 62% year on year in August. So there is a strong expectation that the ongoing clampdown on domestic supply and the stable demand for coal during the summer and winter season. So we also think that the coal price outlook will be quite positive in second half of this year. As of August, the HBA, the Indonesia coal price reference, hit a new 6-year high, touching around $107 per ton. For Qinhuangdao, 500,000 and 5,500 cut, hovering around $600 per ton. This is a level that the authority deemed abnormally high. So that means right now the domestic coal prices are still at a relatively high level. So moving forward, we think that the imported coal will continue to fill the supply gap, and that will support the coal prices moving forward. So these are the 6 charts that we keep monitoring every month. The first chart shows that the slight drop of the domestic raw coal production. So you can see here the in July the domestic supply dropped by around 4 to 5%. So on the other hand, the seaborne coal market, the Indonesia coal exports surged by 33% in July. This is a new high over the past several years. So due to the strong demand for power, we can see here the thermal and hydropower grow healthily by around 5% in July also. So this is the Indonesia domestic coal price. The HBA again hit a new 6-year high in August. So as I mentioned earlier, the Qinhuangdao 5,500 gut FBO spot price was slightly above $600 per ton. So it was still in the abnormal zone. So the last chart shows the inventory level of the pot coal. You can see here, year on year in July, it grew by around 60%. So right now, the inventory level was still high. So because the high level was mainly due to the strong demand for power generation. So that means the governments, they are well prepared for the summer and winter season. There is a question asking about Nordic. So we don't cover Nordic discounter. So but we attended the results briefing previously. So yes, Nordic is in the oil and gas sector. So the questions is asking about the outlook of Nordic in next few years. So if we take a look at the results as of second Q this year, both the top line and bottom line grew healthily by around mid-teens. So also this is the order book driven. So if we take a look at the order book, it is quite healthy also. So I do remember that the management was quite positive of the outlook because they think that the oil prices at this moment, the level was quite positive for the business, for the operation, and also the demand for the maintenance services will remain stable, and project services will improve along the high oil prices moving forward.
Hi, there's a question on First REIT and how it will be affected by the rupiah fall. So First REIT won't really be directly affected by the rupiah fall because, as you would know, in July 2015 there was a regulation for all transactions to be transacted in rupiah. So for them only any other acquisitions done after July 2015 will be affected by this, and will continue to be receiving SGD. But for the sponsor side, they are willing to transact in Singapore dollars, but First REIT will need to incorporate a certain formula based on the Singapore dollar rupiah exchange rate. So in that sense, they are quite, they are not really directly affected by this rupiah fallout.
There is also another question asking about the reason why the share price of Geo Energy and Gear, the Golden Energy and Resources, does not reflect the positive outlook for the amount of coal. Right now, if we look at the fundamentals, the ramp up of production was still on track for both counters. However, for both Geo and Gear, at this moment, the cash costs for them were higher than expected. That was because the cash ratio for their new mine were higher. But according to the geological report, the cash cost will decline in the next few years. So the investors may think that the ramp up of production may not translate into higher bottom line, but we must be forward looking, right? So we are still positive on this two counters as the ongoing expansion of their production. So we do remind the investors that for GO, in the second half of this year, they will secure a new offtake agreement for the TBR mine, which is the new mine. So according to the management, the terms for this new offtake agreement will be better than what they secured last year. And also right now they are holding cash at around 230 million US dollars, which will be used in acquiring another new coal mine. So with the potential M&As, we think that the inorganic, both the organic and inorganic growth will help GO to grow their business in the future. Thanks. So if there are no more questions, we will end today's webinar. Thank you for tuning in today. So we'll see you next week.